Traders! Stop placing swing trades with no stop loss orders and open your ears! Bitcoin has just broken a major bear flag, but the breakout itself isn't the most important part. What matters is how price behaved after the breakout, which levels were accepted, and what's happening underneath the surface right now. Because while price is moving higher, positioning, leverage, and capital behavior are quietly shifting. Let me show you what the charts and the data are confirming. Let's go! At the same time, the next trade is preparing. As you guys know, I'm doing an open live challenge, going from $10,000 to $100,000. Entries and trades for those are shared in my Telegram channel. I don't force entries, I let structure confirm, and I log everything in real time. All trades and updates are shared in my free Telegram channel. Link in the description. Check it out. Before we get into the charts, let's talk about what's happening behind the scenes, because this really matters. First, active loans on Morpho and Arbitrum have reached an all-time high, up nearly 200% over the previous 2 months. A lot of this growth is coming from structured on-chain yield programs tied to USDT and USDC. That tells us something important. Capital isn't leaving the system. It's being deployed more efficiently. An interesting point I want to add is I recently looked into the Senate Clarity Act, and one of the main contention points was this idea that stablecoins can generate yield. Legacy banks don't seem to like this idea. I wonder why. So I would encourage you to look into such bills or any types of legislation that are on the table, because remember, charts do not shape the future, but legislation can. Next, Ripple and LMAX Group have announced a deal to expand institutional stablecoin usage backed by $150 million in financing. Wow, that's not retail flow. That's infrastructure being built for institutions. It's important to put something like this into perspective. The amount of money at the rate that it's going into this space for institutional development says a lot about the future of this space, because years ago, this type of investment was just not the case. So the fact that they're pouring this money in now says there is a lot of growth potential. So very good for your investments. It's a good time to be looking into investments into this space. And for those who have very bearish points of view, I don't know how you justify those points of view when this type of money is pouring in. And then a very important behavioral signal. Bitcoin OG selling has dropped sharply as Bitcoin breaks above major resistance. Historically, when long-term holders stop selling after resistance breaks, it suggests confidence, not exhaustion. My question is, what is an OG? I don't know what that is. Let me know in the comments. I'm an OG. Michael, there is no reference to you in this section at all. There is no need for a Michael Saylor impression. You are wrong. There is always a need for a Michael Saylor impression. All right, I got to move along here. All right, so while price pushes higher, we're seeing less forced selling, more structured capital, and smarter positioning. Now, let's see how all this lines up with the charts. Let's start with the Bitcoin daily chart. Bitcoin has officially broken the bear flag. Yay! By the way, if you got fooled by that bear flag, you need to watch this channel way more often. But anyway, the way it happened matters. Initially, price broke the trend line, and that move was weak. There was no swift follow-through. But instead of failing, price held, accepted higher value, and began pushing through key levels. First 90,000, then 95,000. That is how we recognized a failed breakout from a real one. Strength isn't speed, it's acceptance. It's all about acceptance. Now, let's zoom into the 4-hour chart. Price is currently above the active order block, and I am not interested in chasing it here. What I am waiting for is alignment. If price retraces into the trend line and the order block at the same time, that overlap dramatically increases probability. That's where structure, liquidity, and risk align. If we get that retracement cleanly, that's where we can justify risk. Until then, we wait. Because remember, flat is a position, people. It's important to understand that price may not pull back into the order block and rally. This is one scenario of many that carries a higher probability of a positive outcome. But understand, this is not an absolute forecast. Price may find support much sooner, like at the 94,500 area, and rally from there. Your job as a trader is to be able to adjust to whatever the market throws at you. On the 2-hour chart, we can clearly see two bullish order blocks. In a market with a strong trend, these zones really matter. They're areas where buyers previously stepped in with intent, and they often act as reaction points again. Any clean move back into these zones with confirmation could offer a solid opportunity. This is why lower time frame structures become very important once the higher time frame bias is set. Quick update on the trade challenge before I talk about Ethereum. I have now taken 2 trades, one on Render and one on Link, and both have been wins. The second one, Link, the trade went really well. And from here, I'm simply waiting for the next clean setup that the market offers. So here's where the account stands right now. 2 trades shared. Win rate 100%. The P&L $499.23. The account is up 4.99% as I publicly grow this account from $10,000 to $100,000, fully transparent. And by the way, these setups were shared in the Telegram. Just saying. Now, let's move over to Ethereum. On the daily chart, I mentioned in earlier videos that as long as price stays above this key level, the bias continues to be bullish. That is exactly what happened. Price held above this red level, accepted value, and continued higher. As long as price stays above that zone, we can continue to maintain our same expectations. On the 2-hour Ethereum chart, there is a bullish rectangle forming. These structures often engineer liquidity to the bearish side first, shaking out weak hands before pushing price higher. If this plays out as expected, I'll be watching closely for clean setups here as well. Not getting married to any opinions, just waiting for confirmations only. It's important to understand that this illustration that you see on the chart represents one possibility of many possibilities, countless possibilities. The idea behind this is not a concrete forecast, but instead it gives you the ability to prepare for one situation that carries a greater probability. Also, I want to point out that this area happens to be in the middle of a fair value gap. So something to keep in mind, as well as an old resistance, new support. So there is a lot of alignment in this area. A great place to prepare for. By the way, I'm tracking the entire challenge using Profits Precision. It's a great tool for journaling and accountability. All links are in the description. And make sure to join the free Telegram channel. That's where I share updates and setups in advance for the next trade. So check it out because you'll find the next setup very soon. All right, people, thanks for watching, and I will see you in the next one.